Good evening, good afternoon, and good morning, everyone, depending on where you are. Welcome to the FNA 13th FMI broadcast. As always, thank you for supporting our events. Of course, thank you to our guests for making the sessions as engaging as they are. Today, we have another two fantastic speakers with us. And before I hand over to them, and while we are waiting for others to join, let me do a very quick housekeeping. This FMI broadcast follows a 60 minutes format. Roughly 40 minutes of that would be discussions with our guests, followed by short Q&A. If you would like to ask questions, please do so, but do not use chat functionality as it tends to get lost in that. Instead, there is a Q&A functionality at the bottom of your Zoom screen. If we have time at the end, our guest speakers will cover as many of them as we can. Next slide, please. Just a brief introduction of who FNA is. We are a leader in advanced network analytics and simulation. Our software is used to uncover hidden connections and anomalies in large complex data sets to predict the impact of stress events and to optimally configure financial systems and infrastructures. This broadcast will delve into the ways in which collaboration and innovation can expedite the transition to sustainable finance. Our esteemed speakers, Bénédicte Nolens of BIS Innovation Hub and Rosie Hampson of Goldman Sachs, will discuss findings from Project Genesis 2.0, a public-private report identifying technological solutions. Topics will cover Genesis 2.0's most promising areas, improving sustainability data through AI and machine learning, reveal opportunities for collaboration, policy perspective, and driving broader engagement. By bringing together private sectors and central bank insights, we'll focus on practical steps to harness innovation, data collaborations, and technology to achieve climate goals and drive systemic change. So good evening, Bénédicte and Rosie. How are you doing today?
Doing well. Thank you for the introduction, Amana.
Yes, very good. And thank you as well for your time, for being here with us. It's our honor to basically hear from your opinion and perspective on the topic that we are going to discuss today. So let's kick off the discussion then. So my first question would be to start with, it would be great if you could briefly outline the primary sustainability initiatives currently underway in your organizations. So Bénédicte, are you happy if we start with you?
Sure. So I'm Bénédicte Nolens, and I'm from the BIS Innovation Hub. The Bank for International Settlements is a convener for central banks. So we have 63 member central banks across the world. And our goals are to ensure that there is dialogue between the central banks. We also issue extensive research, including research on fintech. And the third operation that we have is the Innovation Hub, which I am part of. So I will, for this purpose, focus, when you see our organization, only on the side of the Innovation Hub. And within the Innovation Hub broadly, we have at the moment three live initiatives. So one is we're running right now with COP28, a tech sprint. In fact, the deadline for submission for that is tomorrow. And we're seeking for technology solutions that make use of AI, or that make use of blockchain, or that make use of other kinds of data sources, such as spatial data or IoT-related data. And that can be integrated with green finance solutions. And green finance, as you know, solutions can be quite broad. It can include, for example, loans, or it can include equity-related solutions or bonds or any other products. A second live product we have in our Innovation Hub is called Gaia, and that project is seeking to derive from annual reports ESG data through the use again of technology, and in particular again AI, and seek to identify some the related ESG material and risk profiles of different issuers. And then the third project that we actually completed, including with Rosie at Goldman, was Genesis. So we did 2 Genesis projects. One was around tokenization of a government green bond for retail investors. That one was already completed about 2 years ago. And it showed the benefits of tokenization from the fractionalization perspective in terms of democratizing, you could say, the access to such bonds. And then after that, we did an institutional example. And the institutional example was focused on attaching carbon credits to the bonds. And you could say these carbon credits took the form that normally are, or it has the role that normally a coupon would play in a bond. So rather than a cash coupon, you would get carbon credits. And that could be quite valuable in the future, because as everybody moves to net zero, there is an anticipation that there will be a more active carbon credit market. So I'll leave it at that, and we can delve deeper into each one of these a bit later.
Yes, thank you very much, Bénédicte. That a very comprehensive intro that you provided. And by the way, I just re-emphasize one Bénédicte just mentioned. So the deadline for COP28 technical sprint submission is tomorrow, right? So yeah, go ahead and check the website that we put on the chat if you would like to participate. So the deadline is tomorrow. You still have 24 hours at least. Right, so I think I'm going to ask the same questions with you, Rosie, if you don't mind. So could you briefly outline the primary sustainability initiatives currently underway in your organizations?
Yeah, sure. And thank you very much for having me. Delighted to be on this panel with Bénédicte. So just at a high level, some of the initiatives that we here at Goldman are looking at from a sustainability perspective. So in 2019, GS established our Sustainable Finance Group, and we actually announced a 750 billion sustainable finance commitment by 2030. So as of the end of 2022, we've actually already reached 55% of said target, with about 215 billion being achieved in the climate transition activity space, and about 67 billion in inclusive growth. So we obviously continue to focus on delivering holistic and market-based approach to sustainability with our clients, ranging from energy transition to furthering kind of inclusivity within businesses. From an operational perspective, we have a 2030 goal to achieve a net zero carbon emissions from our own operations and from our own supply chain. And a key component of this, as you can imagine, is in relation to engaging with our vendors to address some of the scope 3 supply chain emissions activity, as this is obviously very critical in us achieving our own 2030 goal. On the inclusive growth and inclusivity across businesses, the firm leverages both its kind of commercial and philanthropic capabilities to enable better access to capital, create opportunities for under-resourced communities through initiatives that both provide kind of education access and also affordable capital. So just a quick snapshot of some of the work that we're doing. And we certainly have the mindset that no one company or company type can help build this sustainable ecosystem alone. It's very much about collaboration. I think some of the questions that we have later in the panel really focus on that collaborative nature. And so we do work very closely with our peers, with our clients, and importantly with the public sector as well, to address a lot of these challenges and spaces. So very happy to share more about some of our goals and initiatives. And I think later we'll come on to our approach to this as it pertains to blockchain-based solutions as well.
Oh, thank you very much, Rosie. I think there's a list of very impressive sustainability initiatives and goals, as well as achievements that you and team has been doing. Now, I'm going to move to the second question. So Bénédicte, you mentioned that the third project in the previous answer to the first question is on the Project Genesis 2.0 that you have been, well, you worked with Rosie, and the output has been published publicly available as well. If people would like to read them through, I think we put them on the chat as well. Now, moving into the Project Genesis 2.0 in particular, this project explores tech solutions for green finance. Can you discuss some of the most promising innovations and how they can drive progress in this respect?
Sure. So I think one of the, you could say, complications with green, and as also alluded by Rosie, is not any one firm or person or solution really is sufficient to address the size of the problem. So there is really a prism of solutions, so to say. And in that sense, I wouldn't say that Genesis is the most important of them, but it is one possible area to focus on. So in general, first of all, it concerned green bonds. And of all the financial sector products, the green bonds were probably the first dedicated green product, and were the one that saw the fastest growth. So it's still small, actually, compared to global bond issuance, but certainly compared to other green products, it was the front runner and the fast grower, which is why we focused on green bonds as opposed to on other green products. I do think things will change. There will be a lot more green lending, for example, and maybe even green equity. But green bonds certainly were the first to grow reasonably fast. So we decided to focus on that segment. But one of the emerging problems with it is what people call greenwashing. So these bonds will be issued, but the tracking of whether the green initiatives are properly done is fairly manual. And manual is never the best solution in a sense, or never the most efficient solution. So what we wanted to look at is how can you track the use of proceeds in an automated fashion? And in this case, of course, in prototypes, as we do, you need to make some simplifications. So we assumed that the use of proceeds was invested into renewables, whether it is a solar farm or a wind farm. And we then looked at how can you track the production of carbon credits by such renewable energy operations. And you can do that through attaching IoT devices. And then at the same time, these carbon credits that are being generated can theoretically be tracked on a blockchain. So you would say the advantage of that is that you get more automated real-time transparency, and you get a clearer provenance to these carbon credits. And that, in fact, is a very important matter, and even more so now that increasingly there are some cases of some abuses as well within this carbon credit market, which we have to realize is a fairly unregulated market at this stage. So this prototype in some showed these aspects, as said, the green bonds, which we tokenized, and then the attaching of these carbon credits. And the delivery of the carbon credits was done through the use of smart contract technology. So the use of tokenization was throughout the product, you could say, from issuance to the tracking and then the ultimate delivery of the carbon credits. So that was the project. So there is, of course, efficiency that you can create in terms of the placement of the bond through the tokenization, which Rosie would be able to elaborate on further. But aside from that, as I said, there is the tracking benefit and the automated delivery benefit.
Oh, thank you very much, Bénédicte. To me now it sounds Project Genesis 2.0 is a very cool and innovative project, also a solution. So thank you for the description on the innovations that you and also Rosie have done. So now, Rosie, so now I would like, then I think would be great if you can also discuss some of the key technical findings from the Project Genesis 2.0 in terms of feasibility and potential to address issues like greenwashing, for example.
Sure, happy to. And I think before I go into that question, and I'll kind of go a bit more on the technical side versus what Bénédicte has highlighted, which is more of the kind of business rationale and overall endeavor of the project. Just a bit of background as to what the GS Digital Assets team is and what we do, as that will give the audience a bit of context as to why we participated in this type of project. So the GS Digital Assets team, we're a team that were founded in 2020. We're a global team. We sit within the global banking and markets part of the bank. We have a global and firm-wide mandate. And we have disciplines across engineering, legal and compliance, regulatory affairs, and obviously the business side as well. So our remit is very broad, but fundamentally we work on projects ranging from blockchain applications to capture operational efficiencies in the wholesale market space. We work on projects that look at mobility of traditionally illiquid assets, leveraging blockchain as rails, all the way through to partnering with our clients to help them drive their digital aspirations across debt, equity, and kind of fund-related offerings. And we do this via our own tokenization platform, which is called GS DApp. We also engage in digital money initiatives, and we make strategic investments across the digital assets ecosystem. And finally, to kind of round it all off, we also offer our clients exposure to a diversified product offering. So as you can see, we really are multifaceted in terms of what we focus on. And so it's very important for us to work on these types of projects that are kind of cutting edge and have very interesting use cases and application of blockchain technology. So we participated in Project Genesis 2.0 last year to help develop a prototype based upon the fundamentals of our tokenization platform to really consider how green financing can be looked at, but with a blockchain focused approach. So this was really important for us. So as Bénédicte mentioned, Project Genesis 2.0 took the model of Genesis 1.0 further, and not only looked at tokenizing the green bond itself, but also expanded the prototype to cover digital MRV of the underlying asset that allowed for the creation, allocation, and transfer of this standalone carbon product. That was the kind of key differentiator as it pertained to the previous project. So via participation with a third-party data provider, operational data, and kind of this is going into more the technical side of it, that is relevant to the measurement of the emissions reduction were recorded in real time via IoT devices. And this was then directly ingested into the prototype platform that we built. So the data ingestion portion is really critical in terms of thinking about transparency, auditability, and then importantly, how this interlinked with the creation of what we called MOIs and MOUs. So MOIs are mitigation outcome interests, and MOUs are mitigation outcome units. So in the solution, the MOIs were tokenized assets, and they were modeled with smart contracts, as Bénédicte noted, to create issuer obligations to deliver the future MOU to the MOI holders. And this was in accordance with a predefined delivery schedule. So the MOUs were intended to be a legally transferable claim of 1 metric ton of CO2 equivalent abated. And data from the asset was recorded in real time to form the basis of minting of each of these MOUs to be delivered against the MOI holders. So fundamentally, what I'm trying to explain here is it really was creating that transparent reporting and transparent access to data for issuers and investors alike to both see the status of that underlying financed asset. So really important to think about this transparent nature. The solution, albeit in prototype form, did account for scenarios whereby the issuer fails to meet their obligations. So thinking about a shortfall workflow, and then does illustrate some remediation factors necessary to ensure that the investors actually made whole on their investment, which is of course a kind of critical concern. And then from a kind of data feed perspective, we made sure that investors and issuers alike could download this in a format that was suitable for them to help contribute to reporting requirements. Again, very important when we're seeing a lot more regulations and mandatory disclosures coming out. So all in all, what we were really looking to do was have a product where not only the underlying data can be captured, but it can be retained immutably. And it can also have associated reports that you can intrinsically link to a financial instrument and a financial product. So you can kind of tie specific features to that instrument of sustainability, potentially tying to development goals, etc. So it really was making sure that these products were intrinsically linked to the underlying finance asset. And I think, as you mentioned at the beginning, BIS produced a great summary of Project Genesis 2.0 and a great report, which really highlights all of the potential considerations that one should broach if wanting to really pursue a use case like this further. And this can be found on their website.
Well, thank you very much, Rosie. I think I would like to follow up on another question with you. So the follow-up question would be then, what collaborative opportunities has Project 2.0 revealed between central banks, regulators, financial institutions, fintech startups to accelerate green finance innovation and adoption? Your opinion would be valuable.
Yeah, and look, and my response to the first two questions, I think, showcases this. We're very much of the view that collaboration is necessary and very important, and I think Bénédicte echoed that in her comment as well. But as global regulations around ESG disclosure requirements evolve, there is need for asset level data, and importantly, linkage between green product commitments and such data. So there's definitely a need for collaboration on this front. It's not possible for singular institutions and industries to bring this alignment alone, and making sure that we're aligned on the standards, the methodologies, the formulas, terminologies. We need to do that together, and it's of fundamental importance that there is collaboration. So I think across data providers, issuers, investors, auditors, verification bodies, obviously in addition to financial institutions, regulators, etc. We do need to align in terms of our aspirations for sustainable finance innovation. I think in particular, when we think about the role of the kind of auditor and verification role, there's certainly a lot of work that tech providers can help to support with on that front in relation to standardizing data structures, computation of formulas, which obviously then results in that kind of market standard instrument. So I think that's a very critical role. Given the conclusion of Project Genesis 2.0, we ourselves are continuing to look at ways in which we can help support our clients in their sustainable finance agendas with an overlay of blockchain being considered. So given a core tenet of blockchain is data transparency and auditability, we're looking to provide support across our blockchain-based tokenization platform on green bond or kind of green debt issuances. And we'll obviously continue to do so and continue to support our clients on this front, but it is very much a collaboration and a kind of collaborative effort and approach. And I'm sure kind of Bénédicte will echo that as well.
Yes, thank you very much, Rosie, for your view on that one. So I think I will move to Bénédicte then for the next question. So I would like to ask Bénédicte your view on how can blockchain enable transparency innovations like those in Project Genesis 2.0 help catalyze the broader green finance market?
Yeah. So I hope my internet is stable because it was a little bit unstable. So if it is unstable, send me an alert. But in some, Genesis 2.0 was actually an idea of the United Nations, in particular of the United Nations Innovation Hub for climate change. And the focus there was that the global north is actually representing a lot of the pollution, a lot of the opportunities to create renewable energy and sustainable solutions, so to say, is actually in the global south, but the trust of investors from the global north into the global south is not high enough, which means that a lot of projects do not get the required funding. And so the idea with Genesis 2.0 was indeed to use technology to provide transparency to the use of proceeds in this case, with the other features we also discussed. But the primary thing was use technology for transparency of the use of proceeds, or to reduce the greenwashing risk, right? And this information can be real time when it's collected with IoT devices. And once you have that increased trust, the belief was that there will be increased financing. So I do think this is a very important issue. I don't think that it is immediately resolvable, because it will take a lot of time for this trust to increase. But really, a lot of the green opportunities are in the global south. So if you do think, for example, about even forests in general, right? There's a lot of that, for example, in LATAM, where you could equally so collect data, be it in another fashion, maybe not IoT data. It may need to be satellite data or other data for monitoring of, for example, green bonds that are focused on preservation of certain forest places. So in sum, the idea of Genesis can be applied beyond a typical solar or renewable energy plant, so to say, and could be applied to other use cases, such as, for example, preservation of forest.
Thank you very much, Bénédicte. So if you don't mind, I can go with you, Rosie, with the same question then. How can blockchain enable transparency innovations like those in Project Genesis 2.0, help catalyze the broader green finance market?
Yeah, so just focusing on Genesis to start off with, and then thinking a bit more broadly. So I think firstly, via the usage of smart contract technology, and the terms of definitions of, with the example of Genesis, MOIs or MOUs, or kind of other GSS or linked products, could be set from the get-go. So along with the rights of the issuer, the investors and obligations of the issuer, right? So ensuring that all of these obligations, terms, definitions are set up front and are built into the asset that is being issued in a blockchain-based format, because this will ensure that then the asset is performing or being held accountable against these terms across the life cycle of the asset, which is very important. So this also means that in terms of things like the future value of emissions reductions from a finance asset could be brought forward. And this was obviously one of the core goals of Genesis 2.0, is contributing to the development or construction stage financing, which means therefore you're acting as a ex-ante enabler in what is really currently an ex-post market. So this could in the near term be potentially attractive to impact investors, given the fundamental tie back to the environmental data and thus transparency. But it all ties to this being built into the financial instrument in the first place, which smart contract technology can support with. Then when we think about MRV, today's manual verification efforts can take 4 to 8 months, sometimes depending on the project, from preparation of site visits, data collection, reporting, and issuance. And the resultant impact is a static one-time report for a single backward-looking production period for the purpose of any given issuance. So can we leverage blockchain-based technology and other such emerging solutions to support that digital effort? And part of the proposition from Genesis 2.0 was to provide MOI holders with this ongoing insight into the performance of the financed asset versus only visibility at the end of the manual verification process. So it provided them with an added level of confidence but also forecasting capabilities as to the likely volume, the timing of delivery, which obviously becomes particularly important. And as I mentioned before, when you potentially have a shortfall risk. And so when that shortfall risk does begin to arise, MOI holders may have the ability then to hedge any potential shortfall from that specific project upfront, or they have more advanced warning of that. And equally on the flip side, in cases where there's excess MOUs that are likely to be produced, if the MOI holder has any rights or options over such excess, plans can be made in advance. So it's important then to think about the MOI performance. You can think about information potentially informing more accurate pricing and investor decisions from a secondary market perspective, but this can really only be made possible with the involvement of more real-time data gathering, data validation, and data verification. So another point in relation to Genesis, but I think it ties more broadly to the kind of green finance market, is in this prototype, it was assumed that the bond and the MOI are appended to each other for the primary issuance, with the ability to decouple in the secondary market. So this increases potential distribution alternatives and avenues for issuers, and potentially appeals to a more diversified investor base as well. So the incentive to append the products to the bond for a primary issuance relates to, supporting green finance projects upfront, supporting the development stage and project funding, whilst also obviously incentivizing issuers to launch such initiatives. So given the MOUs under this prototype were set out in a vintage format, they correspond to a predetermined schedule. The detachable MOI portion can then be sold into the market where voluntary or reg-driven buying activity might be stronger for a particular year. So that was another component as well, but all ties back to intrinsically tying the data to the asset that's being tokenized. So I think overall, the use of blockchain in relation to green finance holds a lot of promise, supporting transparency, accountability, and immutability. However, I think there is still a lot of market education on the use of this technology that's still required, in addition to, frankly, willingness from the market to trial this type of technology for green use cases specifically. So it's clear that in order to move the market forward in this space, we do require forward-thinking participants to collaborate together. And obviously, we hope to be one of those participants involved in those types of transactions moving forward.
Yes, thank you very much, Rosie, for the answer. Now, Bénédicte, so BIS Innovation Hub always have very cool, innovative projects, right? So would love to hear opinion on how can advanced analytics, AI, machine learning, other technologies assist BIS with processing increasing amounts of ESG data. And in your view, how can visualizing and analyzing sustainability data through advanced analytics like machine learning or network analytics, for example, contribute to progress in sustainable finance?
Thank you. So I think this is a very broad question, but maybe so I can say what we are focused on beyond what we've spoken here already about, including, let's say, Genesis. So as Rosie mentioned, financial institutions are increasingly setting their own targets, right? Which means that fortunately or unfortunately, because it's not always easy, they do have to look for scope 3 exposure, scope 3 emissions. And let's see, I don't think that there are complete or full-fledged solutions, but I would be interested to hear if Rosie has thoughts in this regard. But in some, to create more transparency in supply chains, I think is a global challenge and problem. And I think it probably requires solutions, A, but B, it will require a lot of stamina because I'm sure there are many solutions, but they're not covering the whole universe, right? And it's incredibly difficult to cover the whole universe when you're thinking about participants in a supply chain, which can be SMEs in countries really dotted all over the place. So I think this is, you could say, I suspect, even early work in progress as opposed to advanced work in progress. But there are solutions. But again, I've seen those solutions be very much maybe regional, are focused on a specific segment, things like this, and no full-fledged solutions yet. But if people on the line have full-fledged solutions, do contact me. I'm interested. A second area that let's say I at least am thinking about is more simple. It's physical risk. So if sea level rise is what it is predicted to be, then quite some cities in Asia specifically, and I'm dialing in from Asia, are significantly affected. And there is more than one country who are already creating a backup capital to their capital, because the capital could even be affected. So my question there is, how is the finance, how are the banks in some currently calculating in that risk in their financings? And that's really from 2 points of view, from a risk perspective and an opportunity perspective. So from a risk perspective is if they are extending long-term commercial loans or mortgages in highly affected areas, how do you really calculate that risk? And secondly, I would even add to it, how do you avoid some kind of a herd effect where at some point people just think about this who've not been thinking about this? That's really my concern, right? Because there is often a practice to want to be on first line with the best sea view, but let's face it, that's where the highest risk now is going to be if sea level rise really truly happens. And the second thing is, as said, from the opportunity side. So the only way to protect ourselves against this, or these cities, is really through adaptation finance. And so how do you match these kind of situations and risks up to opportunities for adaptation finance? So these are two areas that at least circulate in my mind as interesting areas to put further thought in terms of the financial sector and the ability to explore opportunities for greening the financial system, but also, as I said, doing adaptation finance and transition finance.
Yes, thank you very much, Bénédicte. So I think we are now moving into the last question before we move to the Q&A with the audience. So looking ahead, what key innovations do you anticipate driving progress in sustainable finance? Rosie, do you mind if we start with you?
Of course. So I'm not going to note any specific innovations or companies per se, but I think, and this is kind of crystal ball question, I guess, but really thinking about what are the key areas to drive down cost for decarbonization across sectors. So I think that's one, is thinking about what are the technologies that can be used to drive down said cost, and kind of the innovations therefore that need to be leveraged to do so. And that also then ties in with kind of efforts to integrate technology innovation into legacy operations. So I think that's one, is really thinking about the kind of decarbonization sector innovation. And two is then a bit more high level, but about the regulatory space and ensuring that efforts are being made in the regulatory space to drive further innovation and kind of really being adopters and embracing such innovation, whether it's by pure regulations, engagement in kind of consortiums or those types of activities, it is quite important in making sure that these innovations come front and center. And importantly, these innovative companies are able to collaborate with other areas of the industry to actually then build out commercial projects and commercial opportunities. So quite high level, but that's what we're hoping to see and want to work on as well, to be honest.
Yes, thank you, Rosie. So can I ask the same question to you, Bénédicte? So looking ahead, what key innovations do you anticipate driving progress in sustainable finance? Let me unmute you.
Yeah, I couldn't get myself unmuted. But yeah, I think I already I would say, look, I answered it at several instances here. I think the first key thing really is that the most basic is, and someone said this in the chat, the most basic is standards and taxonomies, right? But those are, I would say, I'm personally not in charge of, so I'm just having to assume that these things develop as expected through the different organizations that are focused on that. But those in turn link to disclosure, right? Because it's about disclosure standards, for example. So to me, that is still, if anything, ground zero. It's the most important for any, at least listed corporates. This is what can be forced on them under listing rules, and increasingly is forced on them. But again, it leaves to decide the whole unlisted sector, which is probably the majority of Scope 3 exposure for listed companies, right? So we do have that big Scope 3 data gap, so to say, that we have to deal with. And on top of these both is what I'm saying is where the need for technology comes. And then I personally think that there is... that again, it's not any one of these technologies. I think it's all of these technologies. And I think if anything, that probably green is the area where these technologies are really huge and positive opportunity. So both huge and positive, right? Because we all do want to fight climate change and green the planet and protect nature as well in the process. So in some, it's as far as I'm concerned, it's clearly positive, but it's also huge. And the reason it's huge is because a lot of these data are actually publicly available data. Not all of it, but a lot of it, you can make an angle to it that is publicly available. And there's many ways to do this, many ways of monitoring. So in some, it's all these technologies, and I said I think the opportunity is huge, and I think we're just really just at the beginning of it. But maybe to think about it, for people to explore such opportunities, there needs to be the demand for it, right? And the demand, I think, in part can come from finance. So again, finance to protect itself from greenwashing, or to defend itself with, for example, its regulators, that a green loan is truly a green loan, or a green bond is truly a green bond, or a green equity is truly green equity. I do think that they will increasingly need these data sources, and hopefully as these data sources, so that in some there is a demand pressure on the creation of these technology-based solutions.
Yes, thank you very much for your answer, Bénédicte and Rosie. I think probably we can have one or two probably. So let's see. Probably we can aim to have one at least questions from the audience, right? So probably I can pick the one. So there is a questions on whether you see potential roadblocks or regulatory obstacle in real world implementation of blockchain-based green bond platforms. And what do you see that needs to be done to address them in order to spearhead the green bond adoption?
I'm happy to take, happy to take part of that, maybe more from the kind of less the regulatory obstacles, but more generally some of the maybe tech, operational and adoption roadblocks. So I think in terms of green bond adoption, one is purely from the economic terms perspective and obviously making that attractive to investors. But let's remove that part to start off with and think more about just some of the blockchain components. One is very much education. So really educating issuers and investors alike on what is the core difference from a both operational but also ongoing holding perspective in terms of holding a blockchain-based bond, be it green or be it vanilla, frankly, and helping them to understand what that means. What does that mean from their kind of legal or beneficial ownership perspective? So that's a very important one for investors to understand. What does it mean from a custodial model standpoint as well? So that's very important. And what does it mean from a kind of internal technology maintenance and an ongoing uplift perspective as well? So I think there's a lot of education that is still to be done in terms of tokenized bond or digitally native bond issuances, again, be them green or be them vanilla in nature. I think specifically for the green bond space is making sure that we can have a certain level of information contained within the token itself that is meaningful for the end investor, but also that they can comprehend and they can transpose into something that's useful for them. So that's another piece that's very important, and that all comes into building it in the smart contracts in the first instance. So that's a kind of technology component. And I think finally is thinking about when we look at the secondary side of these tokenized bonds, how can they be tradable? And thinking about potential venues that these would be able to be accessible on. And so ensuring that there really is liquidity of these products on an ongoing basis.
Yes, thank you very much, Rosie. So I will probably take one more question. So there is a question on what, in your opinion, what one development could create a tipping point on green finance? Bénédicte, are you happy to take that one?
Sorry, Amala, I didn't get the question.
So what one development could create a tipping point on green finance?
Okay. What one? I actually think the disclosure of Scope 3 exposure for financial institutions, which is going to be required in Europe, is a very important point, by the way. Yes, because that means that financial institutions, let's see, if they're not required to do something, then there's less pressure. But if they're required to do something, to be frank with you, they will try to do it right, because they know their exposure is too high if they do it wrong. And that means they will have a very large knock-on effect requiring those data.
Yeah.
And I would say, why do I distinguish a financial institution there from all the list goes that are required to do the same thing? And the reason is simple, because the financial institutions are heavily supervised, whereas a normal list go is not. So let's say I'm a computer list go and I disclose that I'm having the following Scope 3 exposure. Maybe nobody's checking other than an activist investor. But in the case of financial institutions, there could be increased focus by the supervisors to these institutions.
Yes, thank you very much, Bénédicte.
And the other, I would say, is stress testing, of course, and that links to my second. So both link to my example. One is Scope 3, and the other one is stress testing of financial exposure of financial institutions to climate risk scenarios, which is already happening. But it could happen, let's say, more frequently, or with other expectations, or with other estimates, and short versus long term, etc. I think these things put a lot of pressure as well on green finance.
Yes, thank you very much. So thank you as well for the questions from the audience. I think we have some other questions, but I think in the interest of time, probably we can finish the session today. So again, thank you very much for our distinguished speakers today, for your time, and then also for your valuable insight to us about Project Genesis and sustainable finance in general. So thank you. A big applause to you, Rosie, as well as Bénédicte. So our team just put in the chat the LinkedIn profiles for both speakers if you would like to connect with them or probably asking more questions. There are also some materials that we put on the chat. So resources will be shared with you with on-demand viewing link. So coming up next, we are having the 21st CBDC broadcast in October 25th. Where we are going to explore Project Rosalind, another project from BIS. So so the speakers will be from Visa as well as Bank of England Prudential Regulation Authority. So all right. So again, thank you very much, Rosie and Bénédicte, and hope you have a great day or evening. So thank you.
Thank you very much.
Thank you.